TSLA Tesla stock it's crashing. This is a really ugly bear flag breakdown today. That I'll paint the picture. I'll take a look at the Q's ARK Invest sector rotation. Uh, it looks bad. This is Brian Lewis with MMT Investing. Please like, share, comment, subscribe, turn on notifications to help me out. So here is the Tesla. This is on an hourly chart. So this is since last year, kind of the top of the Tesla bubble. Our first couple puts down at down kind of bear market trend line. So what I've been saying is I think Tesla is rotating out along with tech and growth, like ARK and Tesla, the QQQ. All seem to be rotating out and leading kind of the market down. It looks like the stock market is doing a pullback. It looks like tech and growth are leading the pullback. That's completely normal sector rotation to do near the top of a bubble, which also would mean that we're not to the top of the bubble. But I do think that if we get a crash out of the tech and growth stocks, especially Tesla and ARK, right now over the next week or two, they're not going to be leading the market back up to the top. They're going to be trailing. But I do think we're still on the front side of the everything bubble. And I want to get in a tighter chart today because Tesla just did a pretty mean sort of bear flag breakdown today. And it's testing the bottom of the bear flag. So it has a pretty big opportunity to dive lower than that right now. Okay, so what... 5 minutes too tight, 15 minutes. Alright, so on Tesla, I mean, we kind of came off the top of the bubble. We've done a couple of stabs here. We get pretty good bounces. So I was short Tesla on this first stab down. And then this second one, it started kind of doing a triangle. I'm like, is Tesla following meme stocks? Is Tesla following tech stocks? I don't know what Tesla's doing. Bang, it stabbed down again. I'm like, okay, Tesla's going with the tech and growth. I think the Tesla bubble is popping, and it's Tesla maybe even leading the down move in tech and growth because it's like the big tech and growth bubble. And so a lot of people really liked this double bottom here as sort of like a takeoff chart, which I didn't buy at all. But and here's why, is because we're throwing these stabs down at this downtrend line, and it's not showing strength. It's coiling underneath necklines, it's stabbing this downtrend line. It looks like we're following a bear trend line, but we flagged out farther than I thought we might here. But if you can see, the downtrend line catches this 420. So yeah, I've painted the 420.69 as my downward target on Tesla over the next 2 weeks. And that is just sort of a rotation out of tech back down here to stab this bear market line. But I think that is a huge level of support, and I would be pretty scared to try to short anything past that. Also because the timing of that is starting to get into April, where I think the stock market might bounce. But you can see like our huge bull flag up the front side of the Tesla bubble is right here at the 420.69. Like, that's our hot line where we took off to the top, and I expect to come right back to it, and I expect to do that right now over the next week or two. And on a tighter timeline on Tesla here, just kind of coming down off the neckline, and we got a rally yesterday. Everyone was really excited about this rally, but it was super weak the whole day, just like staying underneath the breakdown line all day. Then it just kind of didn't pick up last night. And you can see we did like one last stab inside of this bear flag to try to get to the neckline and didn't quite make it. I shorted the crap out of that with daily options, like daily put options, just that expired today, which is something I hardly ever do, is like day trade. I usually swing trade things, or I mean long hold, like, you know, the last 10 years I did a lot of long holds. But right now, you know, we're making a topping pattern on the everything bubble. Things are going crazy. Let me see if I can show you the shorts. I don't know how to pop over to them. Yeah. Okay, so anyway, this is my E-Trade account. These are the Tesla shorts I just put in this morning, right on the tip of that bear flag. And that's pretty crazy. I don't remember how much I bought for, like 3 or 4,000 maybe. But that's the kind of movements. People say like the put options on Tesla are super expensive, but I don't know. Like I saw some that I liked, and I got them this morning, like right here in this the last little poke on this bear flag. So let's go check out where we are now and like what I think is happening the rest of the day. I sold some of these puts here already. Still holding most of them, but I mean, I think we're just back checking this kind of consolidation area now. And I think we're going to keep coming down today. I think Tesla's going to keep coming down because this is no kind of support here. Like, this is an arbitrary stab down to a bear flag that has nothing special about it. Like, there's a little bit of wiggling over here. But, like, where we're checking the downtrend line and where we're stabbing is 500 range. There's a bunch of stuff in the 500 range that looks supportive, but right here we already broke hard down under where we were stabbing. We've already followed this stab down. Usually you follow it and then you'll continue down to the next stab, which, I mean, today I would not be surprised to see 560 close today on Tesla. This is a super mean bear flag breakdown, and this is late. Like I thought this move down was gonna start a fall on Tesla. This move really surprised me back up to this neckline, but I think we are coming down on Tesla. I'm gonna take a look at ARK and like the Qs and stuff because it's a similar chart. If you take a look at ARK, let me go out to like a hourly chart, I guess. So ARK didn't quite have the same top as Tesla, but this sort of M drop and this rollover under the neckline is the same on ARK and Tesla. ARK like got droopier than Tesla early, and it's held up a little better, I guess, as of the last week or two. But if you go look at the Qs, like this is just the tech and growth. Where are the Qs? I'm gonna have to type it in. Here we go. If you look at the Qs, it's the same chart. We got the topping pattern. We got this sort of M-shaped drop consolidation on a support line, and then we took off from this bear market line up really high. So this is if it is coming down, this is a pretty big dead cat bounce, and it's usually if you're dead cat bouncing, it doesn't keep stabbing up and like holding. So it doesn't look that weak on the Qs. Like if this move had followed through, it would have looked like a serious dead cat bounce. Now that we've kind of rolled and bounced, it's looking a little bit less weak. And sort of the bear market convergence lines on the Qs are sort of ridiculously low. I don't think we can like stab all the way down there on the entire QQQ. But you can just see we're just breaking down along a couple of bear market lines. And then we may have popped over. If we pop over, we can kind of swing and consolidate out to the right. We don't have to like crash down. You can kind of crash sideways, even if it's a bearish move. You can do a bearish move kind of sideways, maybe a little down. Just looking at the Qs. But I do think Tesla and ARK have the most downside for a real move down. So this is kind of a cool thing on Tesla. We popped off of the bear market line, and then like this 700 zone has been incredibly hot. Like all of the action on Tesla has been under the 700. We left it a couple days ago, and so that looks really weak on Tesla. And there's not really any place around here to get a bunch of support to slingshot back up, unless it happens right here. It looks like we're already breaking down underneath it now, but somewhere like right around 600 or something. If Tesla's going to pick up support, it's got to be above 600 here. I think once we start breaking down into the 500s where we did these stubs, Tesla's going to be in big trouble. So I mean, that's basically the day trading today, as we're going to see if Tesla can kind of hold this area where it bounced, or is the general market going to pull back? Is Tesla going to kind of lead it down? Which is what I think is going to happen. But you can see the bounces on Tesla all came up to like the 700, but ARK, like the imbounces on ARK were up here in a completely different zone. We broke down. We only bounced to 128. So ARK looks super weak, and I just showed you the puts. Like I've traded out of everything else. Like I was trading mining stocks, I was trading GME, I had all kinds of stuff in there. Like I was doing some call options on some different stuff. But the only positions I have in my entire account right now is this ridiculous, this ridiculous freaking ARK and Tesla situation. But like I have puts out to May just to kind of ride this thing. I think it's only going to be like 2-week down move if it happens, but I just like went really aggressive into this daily Tesla short, which is dangerous. It's really dangerous, but I had to do it. I guess the look at the general market paints the picture. And so on the general market, we've been kind of bouncing off of bear market lines. We're breaking down out of our bull channel and we're bouncing off of these bear market lines. And so this last couple set of bounces was really bad. Like we're coiling underneath the bull, or underneath our bull channel here. So we coiled under it, bounced, hard rejected off. Then we did this huge rising wedge bounce, and 1, 2, 3, 4. We like 4 tapped the bottom of the bull channel and got rejected out of there. And so it can go to all-time highs and test the bottom of the channel again. It can get back in there. But like this stab here is just completely arbitrary stab in the middle of nowhere. Like this thing is not something I would expect to pick up strength enough to test the channel or get back into it. Like it looks like we're picking up sort of a downward slope here. We're picking up a downward resistance on the whole market. And then here's the bear thing is, if you see the big blue line and big yellow line here, this is our big long-term bull channel from 2008. It's like a 13-year bull channel that we've been in. And we love to test the bottom of this thing, and we love to get support on the bottom of this channel. So if the market pulls back, I don't see a whole lot of stuff. Like, I mean, there's a little bit of a line here that we could play around on, 38 something. But I think if the market does want to pull back and really rotate out of tech and growth here before we go to the top, like we're going to have to come down here and test this channel. As you can see, all the bear market lines that we've been setting up and checking are all converging right here. We have our neckline from the previous chops. We did these 2 chops back here, chop, and we've got our neckline from those chops, the top neckline, which also converges exactly right freaking here. It's like April 1st or 2nd, April 2nd, 35.28 or something. Like that's the super sticky convergence point for support that I think we might be coming down to. And that will be a big pullback that people will freak out about if it does that. But at that point, I mean, we really need to see the action that we get if we come down here. But like we've never attempted to break this purple line, and we didn't really set up an attempt to break the yellow line the last time we crossed it on those chops. I can go back and look at them. And you can see like we're testing this yellow line and considering breaking down. Like we did a little bit of action under, like, but most of the coils are on top. It's a little sketchy, a little weak. Like I don't really trust the yellow line, especially since we sliced it on the COVID crisis like it wasn't even there. I don't really trust the yellow line all that much at the bottom of the bull channel. We can come down, but this purple bear line is still completely strong. We've never coiled under the purple bear line. and where all these lines converge is a super strong support area. Just in the event we come down here, I do like the support area to go long, and we'll see. I don't know. The next 2 weeks look really sketchy, and I don't think there's enough time to get down and test the red line prior to the convergence here. But we've already busted the red line. So if we kind of waterfall over to here somewhere, then we just have to see where the coils go. Like, if we're coiling underneath things or like flagging under here or something, that gets pretty sketchy. But if we just kind of stab and bounce on top, like, I would think we would slingshot way back up. Like, we could slingshot back up into our bull channel. We could get all the way up and test the top of the long-term bull channel. We've never, let me go out to a longer chart. We've never once, since 2008, attempted to break out of the top of this big bull channel. You can see the little bull channel is in here. That's what we're breaking down from now. This is the support area I'm talking about on the long-term chart. You can see the Volmageddon stab, the late 2018 stab, the COVID stab. We're stabbing down out of the bull channel. We're setting up some longer-term bear market lines here, but if you go back all the way to 2008, you can see we've tested this thing repeatedly. Like, we stab and coil on top, right? Find support, coil on top, stab, right? We try to stab it, but we always coil on top. We've never once tried to break out of the top. Like, this top is just like not even a consideration. Bang, and then we coiled underneath here. That's dangerous. And then we stab out of it. So this coil underneath is sort of leading these big stabs down. We did a coil underneath here, a little bit there, stab down. So this yellow support line, and then these are not super mean coils. They look more stabby than coily here. It looks like we coiled more on top. So I do kind of like the yellow line here as support, but I definitely like the purple line. That's what I was saying. As far as people saying like all-time highs, yeah, no problem there. Our all-time highs are less than 40. Like, we're under 4,000. I think we can go up and test the top of this thing again around 43, 45, who knows, depending on the timing here. But I do think we're going to have to come down and check support. And then I think this will actually be the top of the everything bubble. Like, I think we're rotating out of tech and growth now. That's why I'm so short ARK and Tesla right now. It's because I think we're going to rotate out of tech and growth. And then I think it's going to be materials, minerals, metals, miners. That stuff, maybe energy coming in towards the top of the bubble. And I don't think it's actually going to roll. I think if we pick up like a bounce support here, it's going to be a vertical freaking slingshot from like 35 to 43. Like, it'll be a crazy mean vertical move like we did back here or something like that. And then the stock market gets ridiculously scary. Like, this is the top of the channel we've never tried to get out of. If we get up here, that's time to start looking at shorts or dollars getting out. This is not investment advice. As always, just a kind of scenario and a map of some stuff that I think might be happening. But I guess I checked out the tech and growth stuff that I think is rotating out, but I want to take a look at the kind of materials and minerals, metals, kind of miners that I think are rotating in. So, I mean, since COVID, you can see like FCX has been the momentum leader in all the minerals and metals. And so this is a really cool chart that I like a lot. It is pulling back with the market now. And so I don't know the downward target on where I'd want to go long in this again. It's more just like a timing target of when I think the S&P is sort of reversing. But this is one of my favorite stocks that I want to go long on when it's time to do that again. But right now I'm not long this thing. But this is a really, really cool momentum leader in the minerals and metals space. There's some little guys like Load that have been kind of flagging and doing cool stuff that I like. And then like AG is like the leading silver miner. So since we're sort of in an inflationary cycle, and you can see like AG has been in a long-term kind of consolidation channel, and it just did a bullish coil, and it just broke out, and now it's flagging. So AG is a cool one. It looks like it's flagging. This is a completely made up line. That's not a real thing. This is just like an idea, like where this consolidation is flagging to, and it could potentially even pull down. We have a gap here. Like if AG pulls down to like 14, I'm buying it up. I'm gonna do like call options out to next year or something like that. I think it could pull down into the 14s here, possibly. And I think we could get that W takeoff and just shoom. Because I think we'll still be getting sort of an inflationary cycle for another year or so. And silver loves inflation, and it's the silver's like half an inflation play, and it's half like a commodity metals play. So like the inflationary play is the monetary asset, similar to gold. Like it's part like gold, like an inflation hedge, and it's part like a metals and minerals commodity play. And like both of those happening at the same time, which it looks like is about to happen right now. Like once we reverse off of this, we get a bullish market and an inflationary scenario, and we also get the miners and minerals like rotating in and leading the market. Like I think silver could be freaking awesome, but just to the top of the bubble. Because if we get to the top and then we get the next deflationary kind of down cycle and we get stock market down, that's going to be a different environment that silver probably doesn't like as much. But I think I'll like silver for a few months here. Coming up shortly, the next couple of weeks, like I'm going to completely reposition absolutely everything I'm doing, and there should be some interesting videos. There's some other stuff too, like in the miners and mineral stuff, like Uranium Royalty Corp is cool. URCCF. Like this is a uranium commodity play. Like this is mostly a play on commodities, but you do get exposure to some miners and some exploration with them. But this is mostly like a buy and hold kind of uranium play that I think is cool, and it's not pulling back with the market, which is interesting. And it actually looks like it's kind of flagging where it might pop now, but I don't like buying anything while I'm shorting the market, because anything can pull back with the market. And then, oh, there's like the U. This is Energy Fuels. This is a uranium mining play, which is kind of interesting, like a uranium miner. But uranium is, that's like part commodity and part energy, so that might actually be really cool if we're rotating into energy also, which I don't know if we are rotating into energy yet. So I've been watching oil, and oil has been looking kind of, oh god, the oil chart. As far as energy plays, like oil is kind of bulled out of its down channel. It may be a breakout, it may be a false breakout. This looks like a super bearish coil underneath the neckline right now. So if oil pops back up here to like 63, which I'm thinking it may do today or tomorrow, I'm going to be shorting oil super long term, like 3-year oil shorts. And I'll be shorting UCO, which is the over leveraged like oil, the oil ETF that just has like all this compounding and crap, where it just like when oil crashes, the UCO just like ridiculously crashes. It's like my favorite thing ever to short, since I saw like what it did during the COVID crisis was insane. It went from like $500 to like $10 or something during the COVID crash, and it has barely rallied. Like this massive oil rally, like UCO barely rallied. I did a video on UCO, so I probably won't do another one soon. I may as well look at it. But yeah, you can see like here in the COVID crash, it went from 500 and it crashed to $10. Like this is the kind of down move you can get in this contract because it has daily compounding. It's a triple levered fund with daily compounding. It's designed for day trading, so it loses percentages every single day to compounding. And it also is based on futures contracts, so you get the monthly future contract losses, or you get like the contango situation. So it's triple leveraged plus compounding plus like future rollover contango risk. And when it crashes, the thing freaking falls off a cliff. It's amazing, like leverage to the downside. And then you can do leveraged put options. You do long-term leveraged puts and just wait for this thing to collapse. Which last year would have been this is probably the best short of the entire COVID anything. I think the UCO short during COVID was probably the nastiest short anyone could have done during that crash. And you can see the oil rally that took us back to all time, like back to the highs. Like, look at this. Like, it's an insane oil rally we had the last year. This thing's almost flat. Um, so if it turns over, and if oil consolidates back into its little area, like energy should be bulling soon, but I don't know if oil really counts now. I mean, oil is sort of the backing of the dollar system, and it's been in this down channel. You know, if it gets in this down channel, it could be lame. It could be in the 20s or 30s for the next 10 years or something, I think. But I really like the idea of getting a long-term UCO put, and just if it crashes, like UCO can really fall off a cliff. And just like position yourself in case that does happen. You know, we can just back test the channel. Even if we're bulling on energy now, like we can come back test this channel on the breakout. If we're not bulling, we can break inside the channel. Like if something crazy happens, like Putin like goes and freaking disbands OPEC Plus kind of move again, and like, you know, Iran and Iraq are overproducing what they agreed to produce, or we get some kind of nuclear situation with Iran, whatever, or like Venezuela blows up again. All those OPEC oil countries are like always crazy. Who knows? You get some insane news, and then all of a sudden oil's crashing like unexpectedly. Like, I just like the idea of holding like a UCO put in case something crazy happens, because it can pay. It can pay big if it does. What's Bitcoin? Yeah, right. Bitcoin. People are saying Bitcoin might have a bad day because options expiry. Blah 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 blah. It's like rallying right into it. So it doesn't look too scary on the Bitcoin front. The dollar is definitely bulling. You can see this long-term down channel in the dollar has that correlated with our huge bull market the last year. And bull market's probably the wrong word. It's just like a slingshot move. But we bottomed and did this power W bottom on the dollar, and I think we're getting back to this 93.5 line, maybe flagging on that thing. But this should be really negative pressure on the stock market. As long as the dollar is doing vertical moves like this is not good for stocks. And you can see the Japan yen, the same thing, January 6th. The DXY and the yen started going strong, but apparently Japan has just been printing freaking money like like nobody's business. The dollar freaking exploded out of the top of the consolidation channel here against the yen, and it's just freaking taken off again. So the yen has been a good indicator, not the yen itself, but the dollar versus the yen. Is sometimes leads what the dollar will do against the DXY and like the euro and stuff like that. Just because there's a different structure to the chart, but the directional moves are often the same. And so same thing here, like the yen is just freaking blowing out again. Like it just did a bull flag consolidation, and it's going vertical. It's already like broken out of the channel, now it's going vertical. So super strong dollar moves. Oil hates strong dollar moves. The stock market doesn't like them either. Bitcoin sometimes follows the market, sometimes it doesn't. Not today. But yeah, that's kind of the story. Is I think we're rotating out of tech and growth, and I'm not saying, people say like sector rotation. They say that stuff every week, and it annoys the crap out of me. That's not what sector rotation is. Let me look at the friggin' S&P on like weeklies. Let's go out and talk about sector rotation. Talk about the actual everything bubble, because like during a little bubble, like this is the housing bubble and the financial crisis. Like during a little bubble like this, you'll get the same kind of sector rotations where, you know, like tech and growth will rotate out before you get to the peak, and then you take, you know, like more conservative stocks, miners, metals and minerals and stuff to the top. And this is a small credit cycle bubble. So you get a monetary credit expansion, you get the bubble up, and then the banks won't lend, and the money starts contracting back in, people have to pay off debt, there's less dollars, boom, things crash. So it's just like the credit expansion cycle, but I can't do it on the SP because it's not long enough. Let's do the Dow Jones. I'm going to talk about some sector rotation. This video is too long, but if you're still here, and if I can find the Dow, I could just type it in. The Dow Jones does go back. It goes back a long way. And this is on the Dow. This is your .com bubble, which was a big tech bubble. The Dow didn't bubble so hard. This is the housing bubble here. But you can see the same shape here. It's the big chop, and then you get a bull channel. And that's the bull channel I was talking about earlier. And then this little thing up here is the bull channel that we're talking about right now. But the idea with a normal credit cycle like this thing is at the beginning of the bubble, like bonds start bubbling in, and then tech and growth starts bubbling in, and then the bonds will rotate out, and then the tech and growth will rotate out, and then you get your top. And it's like the conservative stocks and energies, miners, minerals, whatever, like healthcare and stuff can start doing okay near the top. But you rotate out of bonds first, then you rotate out of the tech and growth, and then you go to the top of the bubble. But these are small credit cycles on the whole front side of the everything bubble. Like, we've been bubbling since like 1982. The everything bubble took off like 1982. And so bonds started bubbling in earlier than that, in like the 70s. So we had bonds rotating in and getting bullish in the 70s while the whole stock market still sucked. Bonds were already bulling, and we had high inflation then. And then this is a huge deflationary move. The whole everything bubble was all a deflationary move. But 82, bang. You start getting tech and growth stocks taking off, right? And then you go, well, we're up near the freaking top of the everything bubble. So, like, halfway up the everything bubble, we had the .com and the housing crisis, right? And now we're doing this chopping as like a topping pattern on the whole thing. And yeah, and now we're getting near the top. So this is what we're in right now is a little credit expansion bubble inside of the everything bubble. It's two different bubbles at the same time. And let me look at treasuries. So this is a similar chart. You can see bonds have been bulling for a very long time, but bonds started rotating out around the COVID crash and have just really been taking a nosedive. And tech hasn't like nosedived from the housing crash, right? Tech bulled and went crazy the whole last year after COVID. Like, bonds were dead already and have just been nosediving while the whole market has been bulling like crazy, right? So you get the bond rotation out. So that's like, oh, okay, we're getting into like the last phases of the bubble when that's happening. And then I guess we'll get back to the Qs. But I mean, obviously, like, the Qs from COVID did a freaking rocket launch, right? So now we're getting closer to the top of the bubble, and this is a tiny little pullback. Like, it's hardly even notable, but it could become notable real quick here. Like, the Qs can pull down into these chops pretty fast here, and it could happen over the next week or two. Anyway, fair warning on not a sector rotation like, oh, last week energy was leading and this week like financials are doing good or something. I'm not talking about that. I'm talking about since 1982 we have been bulling the everything bubble, and tech and growth have been bulling, and now we're near the top of the everything bubble, and the tech and growth entire sector is going to rotate out before we get to the top, and it doesn't rotate back in. I'm talking about like for 40 years. Like, tech and growth can take a dive now and it will be a trailing sector for like 40 years, and we could rotate into an actual bear market off the everything bubble peak, and tech and growth will be some of the worst crap in the bear market, and that can last 3 years or freaking, in the case of Japan, it could be like 40 years. So that's the sort of the bearish outlook that I think we're getting near the top of the bubble. but we're not to the top. So I'm looking for bullish entries to the top of the market. But you can just see I'm shorting tech and growth out right now to the point where I want to go long, and the stuff I want to go long is going to be FCX. That's my favorite. That's what I'm going long. But not only that. I mean, I'm looking at uranium. The IWM should still be good to the top. You know, who knows? These meme bubbles might be weird at that point. That might play out sooner. But that's the general idea in Bitcoin. If Bitcoin pulls back here with a market pullback, and Bitcoin's, let me get to the hourly and take a look at the Bitcoin chart. Wait, was that the right chart? No, weeklies, dailies. Yeah, here's the moving average. This is the 120-day moving average on the daily chart. So Bitcoin generally, I mean, most things, like here's our last Bitcoin bubble, and it's a 4-year cycle on Bitcoin. So the last one topped December, whatever, 4 years ago, right? The previous one topped December, like 8 years ago. And you can see that you pull back generally to this moving average on the way up, and then you get your last slingshot to the top, right? And then this bubble, we pulled back and checked it 1, 2, 3, 4, 5 times. We bulled on it, checked it 1, 2, 3, 4, 5. Yeah, we like pulled back to this average 5 times, and then we did our slingshot to the top into December, right? And this time, we're too hot, man. We did the COVID thing, which looked weird. We bulled on the support, and now we've pulled back not one single time. We haven't pulled back to the average once. So I wouldn't be surprised to see Bitcoin pull back to the average right now. If the market's pulling back, it's like the perfect time for Bitcoin to come back, and not to 37 because it needs more time, but somewhere in here from 40 to 45, I think. Bitcoin could pull back and pick up this moving average, and then could really slingshot off of it. If it does, like if this moving average comes through here and Bitcoin pulls back, like Bitcoin could really slingshot off of that moving average. So that's kind of the Bitcoin entry I'm looking at. I put some money in Ledger X, which is it's a platform that has Bitcoin mini options, which is based on 0.1 Bitcoin. So the call options are like thousands of dollars instead of like $100,000 or something. But actually, right now I have a couple of Bitcoin puts, and I'm trying to put it down to the area I want to get call options, just because I'm ridiculous. Like, it's super dumb to put. It's the same thing I'm doing with ARK and stuff. It's like putting up the front side of a bubble that I think is bullish, just because I think it's pulling back right now. It's a dangerous thing to do. But it's what I think is happening. And I want to put down so I have more money to call with when we get there. Yeah, alright, so, yeah, what is this about? This was a Tesla video? This is Tesla. Let's go look at it again. Tesla's having a bad day. And this is very predictable and almost a little bit late, I feel like. But, let's see where we are now. So, we have kind of found a support-ish area here. And so, if we start flagging out on this today, then that could eat up. I mean, I have like daily puts on this thing, so I'm looking for kind of a good exit on my daily puts, but I'm definitely not getting rid of any of the long-term puts. And I think we are going to bust straight through this thing. I don't think this is any kind of meaningful support level where we're checking out here. And it doesn't look like it's breaking it right now. Anyway, Tesla likes this spot. There's like a 612-ish spot where it likes sitting. once you get down below 600, it gets really, really scary. There's not a whole lot. There's not a whole lot of support if it gets down below 600. So I know there's a lot of Tesla bulls, and I'm not one of them at all. Like, I think Tesla's bubble is popping, and Tesla also is rotating out with tech and growth at the same time. Like, Tesla may be the worst freaking stock this week. I'm sure there's like some random little stocks, but I mean like a big stock that is pretty normal and popular. Like, Tesla is really leading the down move this week, I think. And right. So yeah, so if Tesla pulls back, to like some area down here, like, I'm not trying to call Tesla. Like, I'm shorting it now, and I'm going to be calling completely different stocks like FCX afterwards. So that's what I'm doing, and it's a contrarian sort of market view, but it's actually a really standard sector rotation up the front of a credit expansion cycle, and just what happens near the top. Like, it's metals and minerals and base materials and stuff like that to the top of a credit expansion cycle. Then energy comes in, and like healthcare and stuff later. But that's just like the normal credit expansion cycle kind of rotation stuff. Go look at Warren Buffett or whatever. It's just standard sector rotation, but long term, not weekly. Like, which like ETF was ahead this week. I'm talking about since the 80s and looking forward to the next like 20, 30 years. So that is my theory, and that's my positioning. And I showed you my stupid portfolio where I stopped trading everything else to short Tesla. Ridiculous. All right, so wish me luck, I guess, and I'll check in on other stuff soon.